Okay, welcome back. So in this video, we're going to talk about that. You guys stay tuned to the very end. Please give it a like. If you're not already subscribed, please subscribe and share this video. Share this with all your friends because this journey that we're on is one of the most popular trading strategies that new options traders love until exactly what you're seeing on the screen happens. Okay, so let's take a look at Tesla. We talked about this, I think last week's video. I had a nice little meme there or theme saying it's time to panic. So here's one of the interesting things, and this happens. I see it. I get a lot of my ideas from Facebook groups. So most of these people are new to options trading, or they've been doing it for a while, but not successfully. And from all the things I've seen, high probability options trading is, some people don't call it that, but a lot of people like to sell options. They look at selling options as a way to generate guaranteed monthly income. And while that is true, compared to buying options, because there's not that guaranteed with a buying option platform, there's a lot more risk associated with selling options. So what they do I've talked about it, you got to go back. If you haven't seen my very first video on introducing high probability options trade, I'll leave a link in the description below. I'll leave a link that you can go back to that first video. But the way people manage that risk of high probability options trading is they trade what's called out of the money. And out of the money is doing similar to what I've been showing you guys. You take some people use the Greeks, so they'll use deltas and all that. I don't know anything about the Greeks. I've never used the Greeks. But anyway, out of the money option trading, if you look at, I have Thinkorswim. If you have a different platform, some do it differently than Thinkorswim. I like Thinkorswim. I always plug TD Ameritrade and Thinkorswim because I think it's one of the best platforms out there. So if we look at the Thinkorswim platform, makes it easy. So this is the put side, this is the call side, and the shaded means it's in the money and the dark means it's out of the money. So out of the money options are what most people will use this selling strategy for. And in our strategy, we're doing both spreads and puts. Puts are the most, I think, popular, because when we look at the revenue you can generate from this thing, like people will look at it and they'll see look how far out of the money it is, and they're like, wow, I can generate $575 in 14 days. I'm sold. And they do that. I'm trying to do this strategy where I don't incur those losses. So you can see this kind of goes to the point where selling options is a guaranteed monthly income. And that's not true. It can be, but it's not. If you were expecting to make $3,000 a month, you're kind of screwed for February, right? Because we made $490. And I can tell you, based on the comments I read and what people post, and even some of the students we've had, they wouldn't be this lucky to just be at a $490 gain. They'd probably be at a massive loss, because remember, we had options that were in the $600 range. And if we look at a chart of Tesla right now, I got moving averages. I use another software called MarketClub, which has gotten me out of problems before they get too out of control. But if all you used was moving averages, when the short-term moving averages crossed down through, this is a 7 and 30 day, when the 7 crossed down through the 30, that should have gotten your attention. When the 30 started pointing down, then you should have been on the sidelines. Most people aren't. Most people are like, no, I'll wait until it hits the 200. Well, I got news for you. By the time it hits the 200, you probably already wiped out all your profits and maybe some of your account. So we're not in any trades. We're holding tight on the ones we have. And if we look at them, they're not doing so well as far as profits. You know, this thing was profitable the other day, and now it's not. And then look at my put. This is a 460 put, and this thing is no longer profitable. It's at 100% loss. How do you get out of that? 100% loss. right? We got a credit of $6.55, right? So if I had to get out of this trade, it's got 49 days, so I'm not worried about it now, but I'm at 100% loss. So I always have to look at my worst case scenario. I'm actually at more than 100% loss, but I'm at 100% loss. So let's just factor that. So we got $6.55 in credit, but now we'd have to buy it back for $13,875. So we'd be at a $733 loss, right? Times 100. Oh, well, what does that do to our February income? Yeah, we're screwed, right? We've just wiped out our February income, and we've allowed the market to take and dip into our January income. So that's why I said selling options is not always a guaranteed monthly income, but there's a lot of people that'll push that. I don't. It's not. Nothing's guaranteed until that expiration day is gone and you've booked the profit. What does this say? What are we doing? Well, we're doing nothing. Pretty soon I'm going to be looking at this over here and I'm going to be exiting it. This one, there's nothing I could do about it. It just dropped to 100% loss before I could effectively do anything. So I'm just going to have to take my lumps at some point. I got 49 days. So that's where we stand with Tesla. If I am going to do one bonus here, I'll kind of give you my thoughts about the general market. So if I like to look at SPY because I trade SPY all the time. And if I look at it, what's going on, it took a huge drop yesterday, right? And today, another big drop. We're in amateur hour right now. We're just coming out of amateur hour, so we'll wait to see how this kind of plays out. But I expect today's going to be a big down day. But it doesn't. It's not much different than what we were seeing back here. So what do I pay attention to? I told you the moving averages. So you can see the 7-day is about to cross through the 30-day moving average. Now, a lot of times moving averages work as support and resistance. In this case, we'll see if the 30-day works as support. It already is not working as support as prices have crashed through the 30-day as of right now. Because yesterday it closed below the 30-day and today it opened below the 30-day and it's gone lower. So it's not looking like the 30-day is support. But we'll have to wait and see, because if we go back here, you can see the same thing happen, and eventually, the buyers came back in and bought. Maybe this is buying on the dip. I don't know. Don't time the market, but buy on the dip. That's my favorite oxymoron saying, because that's what I call it. If you buy on the dip, you're timing the market because you're always waiting for a dip to buy, which means you're timing.
I love it when a plan comes together.
And we never suggest that to our students. So that's it, you guys. That's our weekly recap on our high probability options trading. As always, please hit the like button, subscribe if you haven't subscribed, hit the notification bell. You'll get a notification every time we put out a new video. And please share this with your friends and family or anyone that might be interested in investing. There's a lot of other information I have access to. If you're a stock investor or you're looking to get involved in stock investing, I have some great resources that I can share with you. So don't be afraid to reach out to me in the comment section. I'll get back to you and give you what I got. So that's it. You guys take care. We'll see you next week.